well. Dale, good morning. Thank you so much for joining us. Well, we are looking at a market rally on this Thursday with the Dow, Nasdaq, S&P 500 soaring at least 1%. So what is your reaction to Nvidia earnings?
It's just like the market, Remy. Good to be here this morning. Of all the mornings, Nvidia's earnings, right after that, appearing on this show, it makes the perfect sense for us. We are glad to be here to talk about these blowout earnings. Nearly 60, a little over 60% growth year over year. You talk about approaching a $5 trillion valuation. I think they're doing their best to push to a $10 trillion valuation. And some have even said that Nvidia could be a $20 trillion company, which is just unbelievable to think about. The reality is everything was focused on Nvidia late yesterday afternoon. The market moved a little bit more than I was even expecting. With Nvidia's earnings and the labor report that was to come out this morning, I expected the market to be pretty flat. It actually did a little bit of a rebound, as you mentioned. It broke its 4-day losing streak. And it's going to be more of the same to come. I think we finished this year strong, and it's in part because Nvidia debunked the theory that we were in the later innings of this AI demand and this AI spend. It is here to stay. It appears, at least for the next couple of quarters, and maybe even going into 2026, deeper into the year as well, Remy.
Yeah, it's really interesting you mentioned that. In New York Morning Trade, we're looking at Nvidia shares soaring by 4%. But if we look at the details, we are looking at the PE ratio for the company hovering right around 46. But there have been talks about an AI bubble. So given this latest earnings reports, where do you stand? Are you concerned about an AI bubble?
Yeah, I mean, clearly there is a bubble. I think when you think about the word bubble, it is an amount of growth, let's say, that's unsustainable. This amount of growth in the stock itself is unsustainable unless the question is answered of how are we going to turn all of this money that we're spending into revenue. The money that we're pushing out the back door in spending, how are we going to get more money coming into the front door? When that answer appears, and hopefully it's a good one, when that answer appears, either a pop will happen or the bubble will become, let's say, if we talk about a bubble, maybe it's fossilized and it's something we can actually build on. The amount of air that has been pumped into these stocks is enormous, and that is no lie. To say that this has not grew much quicker, much faster, and in all reality, much more unsustainable than we would have hoped, it's here. And it's here. Whether or not it's here to stay is still yet to be seen. I would imagine that when we see this answer, and I hope that we get some sort of clarity in 26 or maybe even in 27, when we see how these companies are going to monetize, and I'm not talking about just small amounts of money. We've got to make up for trillions of dollars of spending here. When we see the monetization of AI, when that comes to fruition, I expect artificial intelligence to not only change the world, but to make millionaires that do not exist today. Continuing to pump into this AI bubble is not necessarily a bad thing. I think we've seen a little bit of air let out, Remy. Clearly, over the last couple of weeks, a little bit of air was let out. But Nvidia came in and started essentially pumping it back up. And again, I think for the next couple of quarters, the bubble itself is not something we're concerned about. What pops a bubble? Well, clearly a little bit of wind, or it's got to be pricked in some way. And where does that prick come? That's the big question at this point.
And finally, Dale, before I let you go, the other breaking news story this morning is the non-farm payrolls report that came out for the month of September. We did see a higher than expected non-farm payrolls figure, but the unemployment rate ticked higher. And of course, the key thing here that we're watching is the CME Fed Watch tool in terms of expectations for what the Fed's next move will be in the month of December. So right now we're looking at odds of a little over 40% for a 25 basis point cut. But what's your reaction on the jobs figure, and what do you think the Fed's next move will be?
Unemployment ticking higher, it lends itself to a rate cut. December rate cut will definitely help this market continue to go higher into the end of the year, but I don't think it's absolutely necessary as I did just a week or two ago. Just a week or two ago, if we were truly in the latter innings of this AI game, and I'm equating that clearly to a baseball game. If we were in inning 7 or 8 or even in inning 9, according to some reports from other AI-led companies, maybe we needed that rate cut to finish the year higher. But at this point, I think the market has looked past that rate cut. That rate cut will be icing on the cake if it comes to fruition at all. Clearly, there is a tightrope act that is taking place. The Federal Reserve has a very, very thin line of error here with lack of data. How do they move? 25 basis points, I think, is a maximum move. And I don't even know that we're really going to be expecting that move going into December. The data that we're reading now is a little bit outdated. And the reality of a 25 basis cut coming to fruition in December still up in the air. For us, it's not as big of a determining factor as to whether or not we think we continue to pour money into these types of AI stocks or even in the S&P 500 as a whole, because I think it finishes the year higher nevertheless.
Okay, Dale, we will have to leave it there, but thank you so much for joining us on this Thursday morning, and thank you so much for sharing all of your insights.
Thank you, Remy.